Friday. Welcome back to the Pulver Report. It is 9:30 on the 26th. Let's get started. Whether it's risk and trading, please and always use trade capital only. Do not trade money. Do not trade with money. You cannot afford to lose. Whether trading stocks, options, futures, forex cryptos, you know the deal. If you're following me on social media, make sure it's the real me. Mondays and Fridays here for the Pulver Report on YouTube, youtube.com/ChrisPulver. Everything else, try to keep the handle consistent. Facebook, Instagram, Twitter @RealChrisPulver. All right, let's jump into the charts. Looking at opening bell, we have some gaps higher on a little bit of everything. Tesla's at 185. I'm showing the screen here. Tesla's at 185. Qs are at 340. I took a stab at the Qs yesterday. I did a 339 by 340 out to June 16th. See if I can take a stab at the debt ceiling situation for a little bit of a gap fill. The video was the big talk of the week with this giant push. I did get a short yesterday on the 380 by 385 bear call spread out to the 16th. I'm just looking to see if I can give this enough time to fill this gap. I collected enough premium on this one where $3 credit. I'm happy walking away with $2.50, $2 even, just to eliminate the risk. But anything that's filling this gap in the next week or two, I'm looking to take some profit on that. So pretty crazy week. And SPY's at 415, just kind of hanging out. There's a lot of indecision going into the debt ceiling reality next week. Let me see if there's any headway on that for this morning. Go to Financial Juice. I'll get logged into YouTube in just a moment. Say hi to everybody. Let's see here. Russia isn't cutting oil production as promised. PCE inflation, consumer spending data comes in hotter than expected. S&P gold weakened, dollar strengthened. I saw that this morning on the currency strength chart. Dollar off the lows. Things are pretty contained here. 30 and 35 coming off the lows. Let me see if I can go debt ceiling and see if anything pops up. Debt ceiling negotiation close to a deal. IRS funding in the spotlight. Biden McCarthy looking to close U.S. debt ceiling deal for 2 years. Oh boy, I thought the best they do is like March of 2024. U.S. stocks set to open modestly higher as the debt talks linger. Analysts see headwinds easing. Okay. Yeah, I mean the market's trying to get excited about something. All right, so may the melt up continue, I suppose. The Q's have been ripping thanks to very few stocks. I'm looking for a quick gap fill if possible, but look, if we come back into this 320 area, I'm way more interested in looking to buy. At this point, I don't know what the catalyst would be to drop that outside of a botched debt ceiling / default. We could have just a tumble in the markets, but otherwise, I mean, we could have some high volatility and get some immediate gap fills into next week. Next week's going to be a short and holiday week with Memorial Day on Monday. So I just look at the structure of like, we're off these lows, we're above this high. Everything that I see, I mean, a pullback is probably likely or needed. I just don't know how severe and how deep. But I think any pullbacks have some opportunities to buy. And I don't think this is unrealistic, but I think the most painful trade of the year is going to be right here. Meaning the market has the legs to get up here with nobody participating. And I say nobody, I mean the people that have left the markets because of 2022 and went into fixed income just trying to be happy with a 4 to 5% yield every year. Thinking that's going to be a long term. It's not. It's short term, and it's nice to take advantage of it and feel the peace of mind of risk free, for the most part, risk free. But this also is, from this low to this high, is a pretty massive gain by just holding and participating, right? So that's a 54% rally off the lows if we get there. If you just stay invested, you're back to where you started, and all that pain that everyone experienced in 2022 is wiped away, right? But if you're not participating because this is what scares you, that's why most people are terrible traders, because emotionally they get, out at the wrong times and they get into the wrong times, So we will see, but I'm way more interested in staying long at this time, especially if we have debt ceiling talks going well, especially if we have inflation data, which we will know more about going into the watch tool. I mean, the Fed's likely going to pause in June. I'm not sure when the CPI data comes out in June, but that's one thing the Fed is going to be very reactive to. So, what do you know? Okay, so this is different. And you know what? I'm starting to kind of lose my enjoyment of looking at this tool every day because I can't believe how much it changes. I mean, do you think that Jerome Powell and every Fed member wants to see this change, every week, every day? Because it does. and this is supposed to be a Fed watch tool. I don't think they're having meetings every day like, we're going to raise today. No, let's pause. Let's pause. No, 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 let's raise. I mean, it's not like that. So it's amazing how inconsistent this has been the last year, just trying to figure out what is the Fed going to do. So I don't know. I guess today I just feel like I could care less about it. Whether they do or don't, we'll find out. I mean, one more rate hike, okay, fine. One more rate hike and a pause, okay, fine. Um, I do wonder. I'm going to look out. Let me go to the calendar here. I'll get logged into YouTube. Say good morning, everybody. I'm going to look for CPI in June. If we go to next month, let's look at high impact. It should be high impact. That'll help me filter a little bit. But I want to look at US CPI. So we have Swiss CPI on June 5th. Let's see, currency report, CP. Okay, so June 13th, Tuesday the 13th, and wouldn't you know it, Tuesday the 13th is inflation data, and then Wednesday the 14th is our Fed rate decision. So again, I don't even know why I'm looking at this today. This is completely subject to change based on what happens on Tuesday. I promise you it will adjust. Whether that's this side on the rate hike getting higher probability or lower probability, we don't know. But year over year, this is what's going to be important. There's no forecast right now, but I'm curious if the forecast is 4.5 or low fours inflation data, and the contraction is going on right now. So I wouldn't be surprised if inflation data improves. Sub 4%, it's probably a pretty good spot. I know the Fed keeps talking about 2%. It just depends on if they're stubborn and saying, look, we're definitely going to do everything we can to get inflation below 2%. Because I think if they get a little bit more lenient with 2 to 3% or even 2 to 4%, then it's I don't know. I mean, this melt up continues, I suppose. So at the open, looking at some risk appetite a little bit. Got some levels I'm watching in the Qs, 340, 341. It's all call volume right now with gaps, momentum up, and curious if we get a snapback going into Tuesday, Wednesday next week, but maybe not. Maybe this market's just ready to rip. Like I said, I'm more interested in buying dips. The Qs have room to run. There's another 56 or another, I think, 30% to the upside here. 18 to 19% from current price. If we get a dip, which I'd certainly like to see, I'd love that type of move right there for about a 25% upside move, and just kind of stay the course. I mean, this could still be some type of bottoming pattern where we carve out these lows. If there's a pullback of some sort, I mean, left structure there or right structure there, right? So here's our left structure. We could have some right structure in the 300 to 320 zone. But in kind of true fashion, this might just go, 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 and it's just finding ways to participate. So I'm not opposed to it, you know. But anyway, we'll talk about that more in stocks and options class in 22 minutes. All right, let me get logged in here. Say good morning. Nice to see everybody. All right, David, good morning. Chris, good morning. Ann, good morning. Ruth Ann, good morning. Jan, Jason, Catherine, Donna, what's happening? All right, Moch, how are you? Bill, good morning. Ranjit, what's happening? Nice to see everybody. All right. Okay, so Q's looking to buy the dips, and what's interesting is holdings wise. I mean, it's all Apple, Microsoft, Google right now. I think Apple, Microsoft, Google alone probably account for close to 40% of the Q holdings. And then you throw Nvidia on top of that, which is like a 3 to 4%, but Nvidia's had one of the biggest runs this year. I think year to date, this is one of the best performing stocks. Although I do think this gap is going to get filled, and I'm taking advantage of that short term. Market cap is now 935 billion. It's approaching $1 trillion just based on stock price. We're 29, 28 plus 29 price to sales multiple, which is crazy. And historically, this has forced Nvidia to fail several times. Back in the dot-com bust, back in 2020, it was all creeping up towards that 28, 29 multiple, and it has failed each time. So I don't know. I'm not trying to be super aggressive here. It's just a trade, but I'm looking for a decent chunk of profit on this one to the downside. Okay. Let's see if we get a lift elsewhere. Yesterday it was the heat map. If you looked at anything from the markets yesterday, only 3 or 4 sectors closed green, mostly led by tech and mostly led by semiconductors. and everything else was pretty much flat or red. I had some fresh lows yesterday. Some chart alarms went off to fresh lows, and just Nvidia pulled up Tesla, pulled up, the Qs, pulled up tech. It just was more Apple, more Microsoft, more just big, big, big tech. Here's Pfizer. I'm long on Pfizer. We had some news on their basically their diabetes drug that kind of rivals Ozempic for some of the weight loss benefits. So they had some positive news this week. I'm still long on Pfizer with a break even around 40. And I'm just going to hang on to this one. I think this one, with decent dividends, low volatility, we've got some correction levels. If we get a lift back up here towards 42.50, I'm going to try to hang on to this towards 50 plus. Also read yesterday that Ford is going to be able to start using Tesla charging stations, which is an interesting little synergy for two rivals. But I think that's also fantastic to kind of promote more EVs. Hopefully, it's a good thing. But Ford at 1166, there's some really good support in here. I still have some Ford shares. I'm looking to ride this thing back up into the $20 to $24 area. These are all expired, so I can get rid of these. But break even wise, just hanging on to it. More credit spreads, more options, lowering the cost basis, looking to see if we can squeeze this bad boy, something like this. Eventually, this coils, and rips. Once we rip, that'd be target 1, and then big pocket and supply zone target 2. See how high we can go. Okay. I'm trying to think what else. VIX is reset. We had some highs up around $21. The Dow Jones has been getting its butt kicked a little bit this week, but has turned positive this morning with a nice little morning star. The IWM small cap. This is Russell 2000. Pausing a little bit. I'd like to scoop up some buy trades around 165. If small cap suffers at all, I've got some bear call spreads down here. The 160, I think just below 165. We collected on basically a dollar. We collected like 70 to 75 cents. So very small risk to this one. And if we get a breakout above 180, I think that's the lift in the catch-up trade. What feels very fragmented this year is the only real growth has been semiconductors, AI related tech, and that's pretty much it. And some of the companies that are so big and the market caps are so huge, they're dragging everything up with it. So we've talked about this the last couple of weeks. If you look at equal weighted S&P, it's down for the year. You look at equal weighted Nasdaq, it is a third of what it is on the Qs. So to start out this year, this is up around 13.5% year to date. If you go to just the Qs, not 4 Qs, just 3. You go to the Qs, we're up here at 342, drifting higher. Here's the start of the year. I believe we crossed the 30% mark. So right in here, it's up 20. Yeah, I mean it's creeping up on 30% as we speak. So big difference with equal weighted, right? But the Qs are not equal weighted. It's market cap weighted. The SPY is not equal weighted. It's market cap weighted. So I do wonder if there's other companies that will be able to benefit from catching up to what's already been established for the front runners this year. Or if the front runners, pause and give something back and things go a little bit sideways. But like I said, I think the pain trade this year for most traders is about missing out. And the missing out is literally the chart that I'm showing you right now. If this just keeps melting up higher and it's dragged by AI, it could be the biggest hype of the year and it could all be crap. But for right now, if there's gains to be had, I want to participate. So probably not tons of ownership, but lots of options. So I like buying dips on the Qs. I hate saying like I'm going to buy something at 342, but it's probably not a bad idea either. I mean, a 340. I'm trying to think actually today with end of day expiration. Let me see if I can actually look at something right now. I don't think this is going to be fantastic, but I'm going to go into my broker platform here and see if I'm going to see if I can get something for a a 339 or 338. If I can get any type of premium for an end of day or even a weekend expiration. It could go to Tuesday because Monday's a holiday, so we might actually get some decent premium there. That does put me right up into the brink of this whole debt ceiling stuff. Tuesday could be a wild day to do some gap filling. But I don't know. I'm just gonna look at something for today, I guess. That's probably a little bit safer. So let me check on something and go to trade everything. Trade everything. All right. So if I go to the Qs, And look at something today, a 342 by 341. That's not what I'm interested in. You know, getting 37 cents for essentially being at the money is kind of garbage. It's just going to get worse if I lower it. So if I go to like 340, a 340 by 339, gosh, 17 cents. It's so bad. So bad. It's not the end of the world, but could I get something for, let's see. I mean, I don't know. I'm looking at something if I could get, 20 cents. 340 is a little bit close. I mean, our gap today is at 340, so I don't really want to have that be my strike. Can I just get something for a put? If I just do a naked put, let me find out. Just a put, sell to open, 339, 338. I could probably do that. All right. I think I'm going to do a naked put. I'm going to set this up for interactive brokers. We can talk about this in 15 minutes for class, but I'm just looking to generate a little income with a 0 DTE. So that's today's expiration. 338, pretty safe. We'd have to really, switch on the day. Let's see, 337. Yeah, 338 is pretty good. That would be, I mean, from current movement, if we went from 342 to 338, let me just check that price. So we're up here. We have a gap down to 331. Current price to 338. We'd have to drop off about 1.2% on the day. From current price, we'd have to drop 1.2%, which would go from green to red. I know there's a whole day ahead, but I'm going to do one thing. I'm going to look also over Tuesday's expiration. But like I said, that's a little flirty with me to get into something where Tuesday is the 30th. We're coming right into that debt ceiling. If there's something that's unresolved for the weekend, I mean, there's just too much risk in a naked put. So I think if I just did this for, maybe 15 to 17 cents, I'd be okay with that. Huh. Okay. All right, I'll move on. Any other questions for this? I mean, I'm good. I'm long the cues. I want to buy the dips. I think the pain trade is, like I said, I'm just making this very clear. I mean, we've been waiting for directional confirmation. It feels like we're getting more and more of it. Unless we have just an absolute botch of the debt deal, I think that this is going to be the trade that everyone misses out on. And, not me, not us in the trading rooms. This. This is what I think the play is. And whether we get there or not remains to be seen, but I think that buying dips is at least giving us a chance to participate. One thing I can't justify right now is I can't justify being in this stock. Why would I buy the stock after a $90 gap? That'd be like buying GameStop at $480. That's stupid, right? I mean, this capitulation, this runoff, take profit, everybody, and just fill this gap, and we'll make some money on the way down very quickly over the next couple weeks, most likely. But if this is up and Amazon's, not Amazon, Amazon has room to run still. Amazon's at 116. I like Amazon to the upside. There's some good gains up here, but Apple's close to the highs, Microsoft close to the highs, Meta close to the highs, Google close to the highs. All these big tech stocks have had great runs so far this year. I'm looking for a dip or a pullback on any of them, but I think that's an opportunity to buy. So that's just my opinion. Doesn't matter. Do what you want with it. But we had a lot of straddles on those big tech plays. So if we're above 110, we're making money. We're below 100, making money. Amazon, we had some straddles on this one. Apple, straddles on this one. Meta, straddles on this one, right? I mean, this is how we played it. We weren't really sure what was going to happen, but markets have proved so far they're breaking these levels. We had a break even on Nvidia. Same thing. We straddled here. Look at this. We're right on the upside. So, we're collecting some income, and it was directionally neutral. And now that we have a little bit more confirmation, I'm seeing just it's a better technical picture to look at. I think the Qs look good to the upside, and this is just one heck of a rebound in tech in general. Okay. All right. Morning, Ricky. How are you? All right. Let's take a look at some currencies. Dollar index. Dollar index at 104. It's still pushing pretty high. Nice position for me this last couple of weeks. I was watching the dollar Singapore run. We haven't hit the highs yet at 35.86, but I'm looking to see if we hit this yearly pivot. The dollar index caused some good profits for this week. We were limited out on profits on the Aussie dollar, and we were limited out on the New Zealand dollar for profit as well. Our euro dollar still going strong. We're short here around 109 and 108.55, so we're up a decent chunk going after 106 or lower. The pound dollar hit some chart alarms. I didn't take the trade, but looking for this thing to possibly short back into 1.20. Dollar CAD is still kind of a wash right now. It's just a big range on dollar CAD. Dollar Swiss, we'll see if we get this. This could be a fantastic reversal pattern. Couple of things. If we just work our way back up here, test this high, find this pivot, this is a good reversal pattern to find pockets and rebalance. So I still like dollar Swiss long. Dollar yen, we got limited out as well. If you're with me on dollar yen, we're trading at 140. That was our take profit. So good. We got in at 136. That's 400 pips. I took profit around the 139 level. I got a little bit earlier with some protection. Just made sense. I was up, 550 pips between the Aussie dollar and the New Zealand dollar and the dollar yen. So I just took it. But we hit our take profit, which is good. All right. So that's what's going on in the currency world. Oil still hanging out in the mid 70s, $72 to $73. A lot of chop, still support at 62.50 to 65. Still resistance at the EMA at 80. A lot of chop going on for the season so far. Gold and silver, dollar strength has been pushing gold lower. Not a surprise. I think gold still has room to drop if the dollar gets stronger. And then silver, same thing. Silver's having a pretty good day here. One thing I thought was interesting is the gold silver ratio is trading around 83 times. So, gold is priced about 83 times more than silver. Historically, that's been a pretty good signal for stocks over the last 25 years or so. And maybe even further back than that. It was in the 90s. I was looking at, multiples of 70 to 90 to 100 plus, and it's been pretty good entry points for stocks to run up. So, interesting correlation, but we're trading at 83, which is historically pretty high. Silver, I still like the position. If we get pullbacks on silver, I'm looking to buy this somewhere in the 21 to 21.50 area. I like silver quite a bit for that. So, any charts you'd like me to take a look at? Otherwise, I'll start wrapping up. Just been freaking bullish today. 340 gap open at 340. It's up to 342. Well, I guess that was an easy morning, huh? Just gap open and buy the gap, which is buy high. I hate subscribing to that trade, but it is what it is. All right. Anywho, that's that. PayPal. Yeah, good point. PayPal. This one actually hit a chart alarm yesterday for some fresh lows. PayPal's at 59.47. So look, I like PayPal. I have a big structure level down here in the mid 40s. Initially I thought this is a pretty promising setup for a falling wedge. If we have one, two, this could be a three drive pattern. So 1, 2, 3, 4, 5. I am looking for lows to form in PayPal. I'm not calling the bottom, but if we come back to this area here, 40, I'll just say 45 bucks. If we have $45, I'm very interested in getting some exposure. Could be a combination of credit spreads, could be some long calls. It might be some ownership with a put below, so I can lower my cost basis over the next 3 to 6 months. But I mean, again, I'll just say this hypothetically. Somehow, if PayPal started to incorporate AI, guess what happens to their stock? Boop. So, I mean, if it's possible, I don't know. But it just seems like for a tech play that's down to 2.5 price to sales versus NVIDIA at 29, I just think that this is a good spot to, I mean, look, people use PayPal, people use Venmo. It's still a merchant service that's really popular. And if there's a good technical level, I'm probably going to buy it. Okay. So if that structure works out, like I said, because we're breaking this low, the falling wedge is not holding like I had thought. Okay. So I wasn't buying anything until it was on the right hand side of that wedge. But now that I see it, if this is 1, 2, 3, 4, 5, this is kind of the final leg. It could have some additional momentum, which is why I'm not calling the bottom. But we are getting some pretty noticeable divergence and divergence. So I am looking for a low to form. Okay, so I do like some exposure on PayPal. We'll probably start incorporating this in equities on demand. I have this in the, we have this in the fund as well. PayPal has some exposure, but we have long puts, which I mean, we've been riding this thing from roughly the 70s down, and our break-even price is, just over 60 bucks. So I don't mind getting some exposure now. Even riding this a little bit lower would be totally fine. Okay. But like I said, if I get $50 or $45, very interested in establishing some staggered credit spreads, getting some income plays, looking at some long calls, and looking to see if this thing, and maybe it's a slow summer, right? Maybe we come down here, establish a low, we base here for a couple of months, and then going into Q3, Q4, this thing starts to rip. It's possible, but again, I like this area. If we can own it low enough, then I'm okay with it. Okay, but yeah, PayPal is good stuff. Um, okay. See, I've got a couple minutes here. Any other questions? So just to give a quick update schedule wise. So next week, Memorial Day is Monday. I will not be doing a live session. Friday, the 2nd of June, I'll be back on the road. I'm trying to think. I could do a live session on Friday, but I'm gonna be I'm leaving today. I'm heading out of town. I'm driving back to from Utah back to the Midwest. So my dog and I have about a 20-hour road trip today, tomorrow, and then returning back to Utah the 2nd and 3rd. So it's going to be a lot of driving over the next week, but it'll be nice to see some family and friends as I've been out here for the last like 6 months. So anyway, I'll keep you posted. But like trading room wise and stuff, no classes next week for me. I'm just going to take a little bit of time. I'll be trading and stuff. I'll be posting in Telegram, but it's going to take some time for some family and friends and before we kick off the summer. And also it's debt ceiling, so I'll be watching as one should, right? Never, never a dull moment in the markets. So, all right. Equities on demand students, I'll see you here in a few minutes. And we might actually throw in some $60. Yeah, I might start getting some small trades in on PayPal. I've been watching this one closely. Like I said, we have this in the fund, and our cost basis is just in the low 60s. I think we got our put, we cashed in our put around $61, so that we got some extra premium for that since it was dropping pretty aggressively. But even a move from current price back into this big supply zone. I mean, if you're having any exposure between 60, you got a $60 to $70 upside per share. So even taking 100 shares, you're making some pretty good profit there. But it's all about buying power. Yeah. Okay. I will see everybody in the trading room in just a little bit. And happy trading, lots of profit. Thanks for being with me this week. Have a great Friday and a great weekend. And class schedule today: equities on demands. I'll do my recap for the newsletter. No master flex. I'm packing up and hitting the road. Okay. But I'll see you all soon. Thanks. Bye. Benji's a great traveler. Yeah, Ruthann. I think I'm just gonna let him ride in the passenger seat this whole trip. Um, he'll be fine. Yeah, I mean, he took the trip out here with me, in nothing but my lap for 20 hours. So he travels like a champ. Yep, good stuff. All right, thanks everybody. See you later. Bye.